guess the strongest thing to be said for the market, not that I follow it as closely as I once did, is that there's a lot of things to worry about. That is for sure. I historically have generally been somebody with a more optimistic air for the best part of the last 2 decades. But there's a lot of things that are troubling out there, especially outside the States. But in my opinion, more inside the States than I often hear people in the U.S. talk about, partly because of this very strange character that you have as your president.
We'll get to our president in a moment. Let me ask you about bond yields. What is the message in the continued drop in yields? We have one of our panelists today suggesting that it's sending, quote, a false signal, just simply because of the fact that yields are negative in so many different places around the world. What do you see?
So I don't know whether it's false. It's sending a very powerful signal. But what is intriguing, and I think I heard one of your guests saying that, I mean, why should that signal be false? I mean, it could be. And if we get massive fiscal stimulus in Germany and more fiscal stimulus in China, and Trump manages to somehow come up with more fiscal stimulus, all of that could mean that bond yields suddenly rise sharply in many places. But the fact that you've got such low yields in the U.S., you've got an inverted curve, you've got amazingly negative yields in so many growing parts of the rest of the world, it's kind of pretty scary in my view, because the markets appear to be saying that they don't see an end to this constant battle with trying to stop deflationary pressures and something close to a recession in many parts of the world. And of course it could be false, but that's the message that is kind of being sent.
Do you worry about a recession in the United States maybe sooner than some people think?
I do, yes. I think if you look at the areas of weakness of the U.S. economy, it's essentially business fixed investment spending and exports. They have absolutely no chance of improving until Trump gets over his very erratic love affair with trade tariffs, which doesn't look like it's happening anytime soon, or you guys as a country get over your love affair with Trump. And the economy's strength, in the meantime, depends so much on consumption, which is fine unless financial conditions tighten unexpectedly, when a lot of indebted U.S. consumers won't be able to afford to keep up the consumption they're doing. Yeah. And I suspect the yield curve is partly sending that message.
How do you see the trade war playing out?
If what I've said starts to show up more in the U.S. domestic data, and I'm not sure how easy this would be for Trump and his colleagues, given how stuck in they are on this approach, but they seem to flip-flop a lot on other things. I think, given that 2020 is an election year, and as we all know historically, as the economy's stupid, he would have to change his whole strategy and somehow come to a conclusion that trying to pursue tariffs with, currently China, but no doubt at other moments other countries, is just simply not a smart thing which is likely to benefit the U.S. And if he did that, and there was some confidence that it was going to be a persistent change, I think there would be an enormous relief around the world, and there'd be a big recovery in global trade. And with it, we'd start to see a pickup in U.S. exports and investment. But without that, the U.S. economy is increasingly riskily dependent on an over-levered consumer. It's like, on some ways, it's like 2008.